So we're here today with Tara Allen with Fairway. Tara, thanks for joining me today.
Absolutely. Thank you for having me today.
Yeah, absolutely. Tell us a little bit about yourself.
Yes, so I have been with Fairway for the last 7 years, and I have been a mortgage lender for the last 15 years. So I have a lot of experience in mortgage lending.
Awesome. And so are you licensed in Florida or?
Yes, so I am licensed in Florida, South Carolina, and North Carolina.
Very cool.
Yes.
Awesome. One of the first steps in the home buying process is getting pre-approval. And sometimes people get pre-approval and pre-qualification mixed up.
Correct.
Can you tell us a little bit about that and
Absolutely.
the difference between the two?
Yes. So a pre-qualification is typically when you're just talking to a loan officer and you're telling them how much you make, how much you have in assets, and they just kind of run some numbers and decide how much they might think you might be pre-qualified for.
Okay.
But an actual pre-approval is when we actually review credit, assets, and income documents to verify everything. That's a full pre-approval.
Okay.
And sellers are going to want to see a pre-approval when you make an offer on a house.
Absolutely. When someone is going through the pre-approval process, what are some of the documents that they might expect to provide?
Yes, so they will need the last 30 days of pay stubs, last 2 years of W-2s, last 2 years of tax returns if they're self-employed or own real estate,
Okay.
and then last 2 months bank statements, all assets being checking, savings, and if there are other retirement accounts or investment accounts.
Very good. A lot of people are doing rate buy downs at the moment. Can you tell us what a rate buy down is and what are some ways that people can save money on their mortgage?
Yes. So there are two different types of rate buy downs. There's a permanent rate buy down, okay, where you're paying a certain amount of discount points, which one discount point equals 1% of the loan amount. Okay, you can do a permanent rate buy down, and that's for the life of the loan. Or a lot of times right now, people are using temporary buy downs, and that's where you're just buying the interest rate down for the first couple years, and then it'll adjust back up to the qualifying rate in 2 years.
Okay, so for example, say they do a 3-to-1.
Yes.
Is that what it was?
Yes.
How would that work, a 3-to-1 rate buy down?
Exactly. So the main one really is a 2-1 buy down.
Okay.
So let's say the interest rate starts at 7%. That's the qualifying rate. You would buy the rate down to 5% for the first 12 months.
Okay.
Then 6% the next 12 months, and then it would adjust up to 7%.
Gotcha.
A lot of people are using that interest rate buy down right now because interest rates are anticipated to come down in the next hopefully 6 to 12 months. So people are doing the temporary buy down to get a lower interest rate for the next 24 months, hoping to refinance in the next 12, 24 months is the reason why.
That was going to be my follow-up. Is it possible to refinance in the future even if you do use a rate buy down?
That is correct, yes, and that's why people are using that.
So what are some things that buyers can do to get the best possible rate?
The best way to get the best possible rate is honestly your credit score. Keeping your credit score as high as you can, keeping your balances low on your credit cards, make sure all of your payments are made on time, and then just trying to keep your debts low. Also, because we now look at the debt to income ratio for interest rates, and so if you can keep your debt to income ratio as low as possible, that will also help get the best interest rate.
Very good.
Yeah.
What are some of the do not do's? So say I go under contract on a property, we're closing in 30 days. What is something as a buyer I should not do?
Yes. So do not make any large purchases without talking to your loan officer, and whether it be out of your checking account, whether you pay cash because you might need that money for closing, or financing. Do not open up any new lines of credit. No auto loans.
Don't buy furniture before you get into the house.
No, or appliances. That comes up a lot. I always recommend waiting until the day that you close and then making those large purchases if you can. The other no is do not make any changes with your employment during the process. If something comes up, sometimes you can change employment as long as nothing major is going on with your income, but make sure you talk to your loan officer before you decide to make any changes.
Your loan officer is your best friend in the transaction, along with your real estate agent. Those are the people that are helping you get to your goal.
Yes.
So, yeah, absolutely. Where can people find you?
Yes.
What are your social media channels, or how can we connect with you?
Yes, so you can find me on LinkedIn, Facebook, and Instagram, Tara Allen, Fairway Loans, and then my direct number is 386-804-5719.
Awesome. Thank you so much, Tara. I appreciate you coming on here today and sharing some information with us.
Thank you.